If you're considering personal loans because your credit card balance just won't go down, you're not alone. Millions of people reach a point where minimum payments aren't working and they start asking whether a personal loan could actually help.
Help me! Help me!
If you've ever looked at your balance at 2 a.m. and thought, okay, how did I get here? That moment hits hard. But choosing the right loan is kind of like dating. Some might look appealing at first glance, but you have to make sure that you choose what's actually right for you. Otherwise, you could end up with more stress, less money, and even worse debt than you started with. It's basically the financial equivalent of getting back together with your ex, because maybe it'll be different this time.
Wow. Huh.
Spoiler, it won't. No scare tactics, no jargon, just clarity. Let's dive in. I'm Alex with Achieve, and we've helped thousands of people consolidate high-interest debt into one manageable payment.
Dollar bills, y'all.
And we're ranked top 3 in customer satisfaction by LendingTree for a reason. We've seen firsthand what works and what backfires spectacularly. Today, I'm breaking down a simple 3-step approach for evaluating personal loans that can protect you from sketchy lenders. Step 2, that's the one that almost everyone skips, and it could end up costing the average person thousands of dollars.
Hell no.
So let's start where most people get it wrong. Chapter 1. The smart way to compare lenders. Most lenders won't tell you this, but not all personal loans are created equal. And that first offer you see could end up costing you thousands more than it should. I see this all the time when people compare personal loan offers for the first time. Someone gets a loan offer that looks great on the surface. Low interest rate, simple terms, and they move forward quickly. Totally understandable. Look, when someone's offering you money, your brain goes, yes, please, thank you, before you even read the fine print.
Money, please.
To start, you want to compare at least 3 to 5 lenders. I'm talking banks that you already use, local credit unions, they usually have better rates, and reputable online lenders. Each one might structure their loans totally differently. Now, here's what you actually need to compare. Interest rates, loan terms, monthly payments, and especially fees. This is where a lot of people get tripped up. Lenders advertise this super low rate and then bam, hit you with origination fees. So you borrow $10,000, but after a 5% fee, you only get $9,500. But you're still paying back the full 10 grand.
That's not fair. People tried to do that to me too once. And I said, not anymore.
Sneaky, right? It's like ordering a large coffee, getting a medium, but still paying for the large. If you pay for the large, you deserve the large. And one more quick tip, use pre-qualification tools. Most good lenders have these on their website and they let you see your potential rate without hurting your credit score. It's like window shopping, but for loans. You get to look without committing. Revolutionary concept. How many lenders did you compare the last time you looked for a personal loan? Drop a number in the comments. Even if the answer is 0, it's okay. We've all been there. Chapter 2, red flags that scream, stay away. Before you sign anything, there are 5 red flags that consistently show up with bad personal loan offers. Red flag number 5 is the sneaky one. It actually looks like helpful customer service, but it's the trap that catches even smart people. Let's start with the obvious ones. Red flag number 1, any lender that guarantees approval without checking your credit first. That's likely a scam.
Houston, we have a problem.
If someone's promising you money with 0 questions asked, they're either charging you insane interest or they're just straight up not legit. It's like somebody offering to marry you on the first date.
That's stupid. Use your common sense.
Flattering? Maybe. Smart? Absolutely not. Red flag number 2, interest rates above 36%. Rates this high are typically associated with predatory lending. A reputable lender for someone with fair credit, you're looking at a 10 to 20% range. Anything above 36%, run in the opposite direction quickly. Red flag number 3, upfront fees before you get the loan.
Show me the money!
Some scammers literally ask you to pay them before they process your application. Real lenders, they take fees out of your loan amount. They never ask for money upfront. That'd be like a restaurant charging you before they show you the menu.
No.
Weird, right? That's because it's a scam. Red flag number 4, vague or confusing terms. If you're reading the loan agreement and you're like, wait, what does this even mean?
We have a problem.
Massive red flag. If you don't understand it, don't sign it. And finally, red flag number 5. And this is the one that catches a lot of people because it feels friendly, but it is anything but that. Pressure tactics. If a lender is pressuring you to sign today or acting like the offer disappears in an hour, walk away. Here's how they disguise it. Hey, I'm just trying to help you lock in this great rate before it changes.
Lies, lies, lies.
That's not customer service, that's manipulation. Legitimate lenders give you time to review the terms and think about it. Bottom line, if something feels off, it's probably worth listening to that instinct. Have you ever run into any of these personal loan red flags? Comment below if this sounds familiar. Chapter 3, how to know if you're ready to apply. All right, here's the biggest mistake I see people make with personal loans. Applying before they're actually ready. When you do that, it tanks your credit score and ruins your chances of getting a good rate. It's like going to a job interview without looking at what the job actually is.
You serious?
Technically, you can do it, but should you? So before you hit submit on that application, ask yourself these 3 questions. Question 1, do you know your credit score? Your credit score determines your rate. Around 700 or higher, you're getting the best rates. 600 to 699, you'll still qualify, but rates will be a bit higher. Below 600, honestly, spend a few months improving it first. Even a small bump could save you hundreds of dollars. It's like leveling up your character before the boss fight, except your boss is interest rates and the game is your financial future. Question 2, can you actually afford the monthly payment? Use a loan calculator, they're free online. For example, a $10,000 loan at a 12% rate over 3 years is about $330 a month. Be real with yourself. Does that fit your budget, or are you going to be stressed every month trying to make it work? Are you going to be eating ramen and canceling all your subscriptions? Because if so, maybe we should rethink this. Question number 3, what is your debt to income ratio? This is your total monthly debt payments divided by your gross monthly income. If more than 40% of your income already goes to debt, most lenders won't approve you anyway. They're going to take one look at your ratio and go, yeah, we're going to pass. Save yourself the rejection.
It just hurts. It hurts really bad.
The goal for a personal loan is to support your situation, not add more pressure. So what's your biggest concern about applying? Credit score, monthly payments, or something else? Let me know in the comments. So to recap, we covered how to compare lenders the smart way, not just interest rates. Because apparently interest rate and the rate you actually pay are 2 different things. Cool. Love that for us. We talked about the 5 major red flags, especially that sneaky number 5 that looks helpful but isn't. And we went over how to know if you're actually ready by checking your credit score, figuring out what you can afford, and making sure your situation is stable. Look, the bottom line is personal loans can help with debt, but only when you understand how they work and choose carefully. If you found this useful, consider subscribing for more videos like this. And if you want to learn more, head over to achieve.com for additional resources on personal loans and debt consolidation. You've got this. Seriously, you're already taking the right steps just by being here. We'll see you next time.